So friends, welcome to this new video on Introduction to Banking. So as you are aware, I've already launched my website BankTekSkills.com. Do subscribe to it. I have recently added a module called Platinum module. So as soon as you'll go into my website, there will be an you can say pop-up will be there. In that module, I have added all the complete videos on various account openings, term loan account openings, cash, credit, inventory management, signature uploading, transactions, freezing, negatively, and lien, RTGS, NEFT. A lot of topics I have added there. ORM, so that you can view all the topics on the one module itself, and they are arranged properly. And do give your feedback in case you feel there is some issue with any video, और you feel that you want some improvement, or you want me to do इसको हिंदी में करना चाहते हैं आप, तो मैं हिंदी में भी एक प्लेटिनम मॉड्यूल बना दूंगा. तो जो लोग इच्छुक हैं हिंदी में चाहिए तो it'll be for good for you, all of them. So thank guys for subscribing to my YouTube channels and subscribing to my website, that is BankTekSkills.com. So kindly go through it, share it with your friends and colleagues. I think everyone would be benefited. If you help others, God will help you. So kindly, knowledge is always meant to be shared. To do share it genuinely, right? So today's topic is, and one more thing, if you subscribe to my Instagram, it's BankTekSkills website, as well as Facebook. Every 15 days I'll be making a draw. So right now I have one person who will be offered this platinum module free. Otherwise, if the subscription is huge in numbers, I'll be increasing the numbers. So it will be all your luck if you are able to get it in free. Otherwise, the cost is very, very minimum. So I think that will enhance your knowledge, those who are trying to join the bank, or those already working in the bank, or those who have joined in the bank recently. So now I'm adding topics more. I'm shifting from FINACLE because I have added a lot of videos on FINACLE on YouTube as well as and the website. So there is different modules are there. Shortly I'll be uploading a module on trade module also. So this will benefit all of you. So kindly subscribe and share with your friends and colleagues. Do share it. I think if everyone is benefited, good for you. So now I'll be shifting more focus to other than FINACLE topics that I feel is important that you should know in today's changing scenario, like introduction to banking. What is banking, right? Of course, I'll be adding FINACLE videos also in between, but I'll be adding more because I already added a lot of videos so people can watch and re-watch again and again. And do join my website BankTekSkills.com, like its Instagram page, like its Facebook page, and I'll be conducting a draw. So what is a banking? Banking is accepting of deposits from public for lending and investment, which is repayable on demand. So what is demand deposit? CASA. So all the banks, they emphasize on CASA deposits because this is a low cost or no cost deposit. So unless and until I have money in my pocket, how can I lend it to someone else? So I need funds to lend to someone. Maybe I'm paying certain interest on deposits, but I'm earning higher interest on lending and as well as earning higher revenue from the investment also. So that difference is my profit. And every organization works for a profit, right? So we're going to discuss banking industry, financial sector reforms, regulatory authorities, banking trends. So this is a financial system which includes debt market, wherein companies raise debts, government raised debts, forex market, capital market, primary, secondary, depository, insurance, banking, RRB, regional, rural bank, cooperative banks, mutual funds, venture funds, investment bonds. And you can see the regulators in the arrows, right? The debt market is regulated by RBI, forex market RBI, capital market SEBI, insurance IRDAI, banks RRB, mutual funds RBI as well as SEBI. So after Harshad Mehta scam in 1992, SEBI was given a lot of powers to control the stock market as well as mutual fund, because there was a scam by Harshad Mehta in 1991 and 92. All of you must have seen the movie in the OTT platform also, right? So there were three distinct phases: 47 to 68 when we got independence. After that, 69 to 91, 91 onwards. So 47 to 68, there was a liberalized policy environment. The role of RBI was to supervise and control the banks, privatization. 69 to 91, bank nationalization took place, financial repression, banking policies reoriented to meet social objectives. So a lot of branches were opened in the rural areas and villages, far-flung areas, to bring those people out of the clutches of the money lenders. 1990 onwards, financial sector liberalization took place. So 92, SEBI was given powers and a lot of reforms. Private sector players were allowed to come into the banking. Technology came into existence and a lot of challenges, a lot of, you can say, competition increased after the private sector banks inclusion. RBI Act was passed in 1934 and RBI started functioning in 1935, 1st April, and it was a private entity. It was not government controlled that time, and it was formed. This act was passed on the recommendation of Hamilton and Young Commission by the then British government. So there is a SLR which has to be kept. Right now SLR statutory liquidity ratio is 18%. LIC was formed in 1959 by nationalization. 1962 RBI was empowered to vary CRR from 3 to 15%. And there were problems of bank failures, compulsory merger of a lot of banks which were not performing well. They were having a lot of losses also. So 85 banks were merged in 1969, 566 in 1951 itself. There were a lot of small banks. Then 69, 14 largest scheduled commercial banks were nationalized in 1980. Further, 6 more banks were nationalized. After that, a lot of rural branch expansion took place. A lot of branches were opened in rural and villages so that those people could use the benefit of those banking. And they could be given loan under priority sector. That includes agriculture, SSI, retail trade, transport operators. So this was raised to 40%. The total loan given by any bank, 40% of that should be to the priority sector. Otherwise, banks have to pay a certain penalty. That includes nationalized as well as private as well as foreign banks also. UTI and IDBI, IFCI, ICICI were also set up with specific objectives in mind. So post-nationalization, what was the increasing reliance of the government on banking sector for financing own deficit? Through SLR, they could raise funds from the institutions. So government used banking sector as a captive source of funds by means of SLR. So SLR was originally intended as an instrument of monetary policy, but in effect served two other purposes also. Allocate bank resources to government, allocate cheap resources to development financing institutions. Steady increase in SLR and increased monetization of the deficit. CRR steadily increased from 17 to 15. CRR at present is 4%. Large portion of the bank funds were locked, suppressed the government securities market to keep the cost of borrowing low for the government. So there were certain problems. In 80s also heavy segmentation of market, inefficient use of credit, lethargy, no competition, right? Poor bank profitability. I mean, people were losing interest, right? So there was no competition there itself. Then Narasimhan Committee was formed in 1991 to look into the problems of the banking sector or financial sector. So it was decided to bring down the SLR to 25%. Right now it is 18%. CRR, use CRR as an instrument of monetary policy rather than using to neutralize the effect of monetization, right? And priority sector, agriculture, indirect agriculture, credit, 10% of the aggregate credit. Bring the interest rate on government borrowings in line with the other market determined interest rates. Allow the more profitable public sector banks to issue fresh capital to the public through capital market, so banks could raise funds in the market. Abolish branch licensing. So if the NPA was less than 3% or 1%, they were earning profit, they could open as many branches as they like. Otherwise, they had to have the permission from the RBI. Liberalized policies towards foreign banks. They were allowed to open branches in our country. quasi-autonomous body under the aegis of RBI to be set up to supervise banks and financial institutions, and phase out the privileged access to development financial institutions. This was a Narasimhan committee, just for your academic record only. So these have already taken place. So there were certain reform measures: operational autonomy, reduction in government diversion portfolio, reduction in reserve requirement, deregulation of interest rate, enhanced transparency, strengthening the call money market, strengthening risk management, implementation of Basel III, wherein NPA had to be 1%, and there were a lot of other reforms. Setting up of a civil track record has to be seen before we give a loan, and Lok Adalats and Surface Act, technology upgradation and Sarsai registration, right? So all the properties mortgaged by the banks are to be entered in Sarsai platform itself. Indian banking system, central bank, commercial banks. So this is figures. Scheduled banks, non-scheduled banks, public sector banks, private sector banks, foreign banks, RRBs. The role of banking: understanding the customer, providing services, meeting all requirements, building relationship, high level of satisfaction, empathize, ethical behavior and social responsibility. RBI, 1st April 1935 started working under RBI Act 1934, wholly owned by Government of India, headquartered in Mumbai. Main functions: monetary authority, regulation, supervise financial system, manager of foreign exchange, issuer of currency, development role, other functions, banker to the government. So liquidity management, issue, manage of currency, borrow money for the government, open market operations, lender of the last resort, regulator of macroeconomy, regulator of banking system. So SLR, right now it is 18%. Every bank is required to maintain a close of business everyday minimum portion of their net demand and tie liabilities as liquid assets in the form of gold, cash and unencumbered approved securities. Can go up to 14%. An increase in SLR assets banks leverage position to pump more money into the economy. CRR 4% right now. Banks in India are required to hold certain portion of their deposit in the form of cash with RBI. So there is a current account maintained with RBI. Cash, but deposit such cash with RBI, and currency chests also. Currency chests are owned by RBI. Any money kept there is a part of CRR. So this is incremental, how bank deposit increased by 100 rupees. So how much this has to be increased, I will explain. It is a tool used by CRR, is a tool used by RBI to control liquidity in the banking system. So bank rate, this is the rate at which central banks lends money to other banks or financial institutions. If the bank rate goes up, long-term interest rate also tends to move up and vice versa. Marginal standing facility, MSF, repo rate 6.5. It is the rate at which RBI lends short-term money to the banks. When repo rate increases, borrowing from the RBI becomes expensive, right? So less credit would be given in that case. There will be less liquidity for the bank. So similarly, if you want to make it cheaper for the banks to borrow, it reduces the repo rate. Reverse repo rate, in which the RBI borrows money from the banks. This is the rate of interest that is charged by banks. When they just want to control inflation through this, when there's too much money floating in the banking system. An increase in reverse repo rate means that RBI will borrow money from the banks at a higher rate of interest. As a result, bank would prefer to keep their money with RBI. NDTL, net demand time liabilities, right? So liabilities minus others India plus assets with banking system in India. SLR investment, hands in gold, excess CPR, treasury bills. These are the government securities which a bank has to buy under SLR. So this is all that we discuss right now. I hope a lot of things I've explained. I'll be uploading more videos on this. This is a very short video just to give you a brief idea about this. So thank you so much for watching my video, and definitely do subscribe, do